How do you check the cash pulse of your company? I'm going to show you a quick and easy way to do it. And what this is also going to do is it's going to help give you a familiarity, if you don't have one already, of transactions that don't hit your radar screen all the time. I'll show you what I mean. So in the last video, I said positively cash flow or die. And I teased you with this: going online and looking at your bank account balance does not tell you if you're positively cash flowing. What it does tell you is, okay, you've got cash in the bank, and it tells you how much cash you have in the bank. But you've got to get into the details of the transactions to know whether you have positive cash flow or negative cash flow. Now let me say, you might have fancy accounting. I don't care if you've got a $100,000 piece of software or lousy accounting. I would like you to go through this manual exercise for a few months just to gain some familiarity with what's happening transactionally in the dynamics of your company. Because this is how you begin to lead from your financials. And I promise you, if you haven't done this in a while, this is going to be an eye-opening exercise. So get a copy of your bank statement or bank statement of every bank account you have. You may need your accounting person there or team, and start going through it. So the first place we look is right here, the balance of the last statement. That's the ending balance of last month, which would also be the beginning balance of this month. Then we come over here to the right. This is the balance of this statement, which means it's the balance of the ending date of this statement. So this is a calendar statement. So we have the 1st and the 31st right there. So here's what I would do. Write on the statement the difference. So you subtract the beginning balance from the ending balance, and that's $1,400. So I just write it right in this spot right here. Now we come down to the deposit section. We have this image deposit. We weren't sure what that was. Did a little checking. Turns out that was actually income. Okay, fine. We have mobile deposits. We know those are income as well. Internet fund transfer. In this particular company's case, internet fund transfers are transfers of money between bank accounts of the companies. So there's no cash in, no cash out. We're just moving money around. So we're going to go down through this statement, and you would circle every one of those amounts, okay? Because we're going to subtract those out of the cash flow. Now, we come down here, we have an electronic deposit from Stripe. We know all Stripe deposits are income. I have one deposit here from PayPal. So we had to check that out. That was an advance on that. I'm going to subtract that out, and here's why. I want to see the cash flow, positive or negative, based on the actual activity of the company. Now, if I want to, below that, I can add loan payments in and out. All right? Loan payments in and out. But I want to see transactionally what's happening month to month. And so the way I would view most companies would be, what's the legitimate transactional activity of the company? And I get that number, and then below that number, I would probably show borrowing and payments on loans like that, with a little bit of a caveat. All right, nothing's always that clear. Nothing's always that simple, right? So now the rest are all the same. We've already talked about. So now I come into other withdrawals. I notice bill pay; those are bills being paid. Fund transfer. So this is the opposite. So this was money that we paid out of this bank account to another bank account. That money I'm going to add back in. So I would circle those and write the total off to the right. So I've got one more section here where I have an external transfer. Talked to my accounting, and they told me, oh, that's for our payroll. Oh, okay. So that's definitely cash out. The next electronic debit is a credit card payment. So let me explain that. That's different than a loan, because in this case, I bought some goods and services with a credit card, but I didn't pay them, but I got them. But there was no cash transaction until I get the credit card bill. And I make a payment on it, and so now I'm going to consider that cash out. So this next one was a electronic debit for the purchase of an asset, okay? Now, it's a one-time purchase, but it was cash out. And it was cash out to support the business. So out it goes, and that counts too. So what I've got here in summary is I'll have a total over here to the right of my $1,400, so I've got positive cash there. I'm going to have circled and totaled up all the deposits I'm subtracting out, and I'll do the same thing and adding back all the withdrawals. And down here in the bottom, I'd go, okay, so my net cash. Let me show you what that looks like. So here's the top section. Here's what it looks like. and there was $1,400 of cash. Okay. Now I've got my adjustments. And so I had the transfers in and the PayPal loan, which I'm taking that out as well. So in this case, you wouldn't have to break all those out or anything like that. You just total them up. And then I have the other transfers that were withdrawals. So I'm adding those back in. My net adjustments are $253. My operating cash balance is $1,694. Now I want to talk about the debt just a little bit more to hopefully give you a little clarity. So you can see here, this asset purchase, which I wanted to show this, is $1,336. Had I, not made that purchase, I would have $3,000. So hopefully what I'm doing is, as I'm leading with my numbers, as I'm looking at my cash from last month, and I can see, oh, I've got extra cash, this would be a good time to go ahead and purchase that asset. Now, if this had been a loan payment, okay, then I probably would have put it up there with the withdrawal and added it back in, and then shown, so I would have shown $3,000. So in other words, because that's important to me. So in my normal cash flow, I've got $3,000, and then, but my true cash flow does reflect, if I drew money on a credit line or I paid money out on a credit line, I need to know that transaction going on as well. Obviously, if you've got a negative cash balance, then you've got to fund it somehow. And so, because negative cash is negative cash. And so you would have drawn some debt, credit line or something, or loan the company money or whatever. But nevertheless, I want to see the operational cash flow, and then I want to see like the movement on loans, and then get the bottom line, because those are going to be two different numbers and they're going to tell me something. All right. Well, I hope this has been helpful, and go check your cash pulse. And next up, now we're going to go to stabilizing the patient with some profits.